Hello and welcome back to Roguefx, the Roguefx Trading course. Today we're going to be talking about liquidity and inducement. We're going to be talking about a plethora of opportunity that the market presents to anyone with the knowledge and or eye. We will be going over slanted lows. We'll be going over equal lows. We'll be going over trendline liquidity. We will be going over 3 candle formations. We will be going over the power of 3 or AMD pattern, right? So in this case, price is going to accumulate, price is going to manipulate out of that, and then reverse, distribute the rest of our long orders that, are obviously previously in profit. We will also be going over weak highs and weak lows. So with slanted lows, what I want you to understand is what's happening on the retest, right? So what price does is we break overall structure, whether that be a choke or a break of structure, and price retest takes out internal range liquidity to the left, retesting some kind of POI and continuing lower. Same with the equal lows. The equal lows simply provides a reason for price to draw lower. So instead of necessarily, stopping at internal range liquidity, what is price going to do? Price is more than likely going to fill in a fair value. Price is going to, at times, fill in at 100%, maybe 50. Maybe it might get a little bit creative or take out a weak high on the way down. Either way, where are we drawing towards liquidity? The equal lows. In essence, internal range liquidity to external range liquidity, internal range liquidity to external range liquidity. When it comes to a 3 candle formation, what I want you to understand is they act as liquidity. Understand that when price is or looks to be engulfing or expanding higher than I don't want to say normal or usual, but if you see a 3 candle formation to the left, and then vice versa, if it's going lower and you see a candle formation inverse to the left, understand you are operating within a liquidity pool, and what you do at that moment in time is very detrimental, right? Because you can profit or you cannot profit. You can be fooled by thinking this is support being held instead of a weak low. Price performs a failure and continues lower to where? Where's the liquidity? External range. This would essentially be called a liquidity grab. And then we have our breakup structure. When dealing with a trend line, understand that as price builds higher lows, and as price continues to break structure towards the highs, more and more longs are being input into the market. Obviously vice versa, but if you're if you're counter trend, if you're trading counter trend, honestly, you're brave is what I'm trying to say, because there's no guarantee this will be 100% filled in. Imagine if this happens, and then this happens. That week low is taken out. Price is rebalanced, leaves a week high, takes it out, continues lower. What happens when that happens? Price essentially has taken out liquidity both from sell side and buy side. When it comes to AMD pattern, understand that price is going to manipulate. Price is going to slowly build up liquidity towards whichever be buy side or sell side. Whichever does raid, understand that we're going the exact opposite. And the majority of the time is going to be basing off of maybe a gap or maybe a POI of some sort. At that point, buy side is taken, sell side is taken. We have a distribution of orders. The unaware individuals are still trying to figure out why this long didn't happen. But now you're aware. Now you understand why this long didn't happen, and you can take advantage of the short, the actual move down. When it comes to a weak high, understand that that's liquidity. When it comes to a weak low, understand that it's liquidity. What is price going to do? Establish its range, come up, essentially retest, establish a weak high, perform a failure to break this low, and continue higher. Whether that be the 50, maybe there's liquidity right here, or maybe it's going to take it out 100%. That all depends on what's happening towards the left. But we need to understand the overall direction of the market is what? Bearish. Buy side liquidity got taken out. What's next? Sell side liquidity. Now, when it comes to a weak low, price establishes its range, retests, establishing a weak low. Price is going to essentially establish our trading range, retest, print a weak low of some sort. Why is it weak? Did it take out the low to the left? No. So what does that make it? Makes it liquidity. Price is going to essentially retest, fail, take out that weak low, or raid those sell stops that are presented and continue higher. Now, the last type of liquidity that I personally use is going to be called it's pretty much obvious order blocks that I see in the market. Pretty obvious, right? And what price is usually going to do is say this is going to be a bullish order block. Price is going to essentially retest slowly but surely. And if not slowly but surely, it's going to be on the lower time frame. Continue to take out weak lows until demand zones are met. At that point, price is all right to continue in an impulsive or bullish manner. Whether it's going to be, very impulsive towards external range liquidity, or it's going to take its time. I'm going to give you a choke, maybe a break of structure, liquidity grab, and then a continuation. There's so many ways to interpret these markets. It's just hard to kind of like list every one of them. Understand this is the basic. This is the very basic of them, or of it. Now, this is about 8 different opportunities, different, I don't even want to say patterns, just opportunities that are presented to the markets on the daily that you can take advantage of if you're patient, if you're disciplined enough, and if you're consistent enough. If I can just redirect your attention to the actual chart so I can show you that these are actually in the markets and that these are actually tradable within these markets. So as you can see, price is giving us essentially accumulation. I want to say for the first 2 hours, or not even 2 hours, for maybe like hour and a half of London. As soon as London hits, or at least 30 minutes before London, price is going to raid the highs, raid buy side liquidity. If you look left, you can see that this order block is very much being presented as a sign of order flow. Validated, price descends about 100 pips towards the lows. Now, I know it didn't continue all the way down and reach 4-hour lows, 1 hour lows, daily lows. However, what it did do was take out internal range liquidity to the left, which makes it apparent that we did take our partials right here. Next, we're going to be talking about weak highs. As you can see, price formed a strong low and an eventual weak high. As you know, weak highs are essentially liquidity. Why? Because this weak high take out any kind of high to the left. It may have taken out this high. We can even say it took out this high. But the actual structural high to the left, of course not, which makes it a weak high. In a bullish market, all lows are protected, which means every weak high is what? Liquidity. So what happens? Price establishes its weak high, retests, takes out internal range liquidity, and continues higher. Whether that be 180 pips, 40 pips, 30 pips, your confidence comes from the range before it. I need you to understand. You should never be afraid to take a trade if you know what you are doing. If you can read price in an efficient manner. Continuing, price gives us a bit of SNR liquidity. We didn't talk about this because I wanted to actually have you comprehend what I'm saying, and I feel like it only makes sense whenever it's on the live data, because I don't think people kind of understand when it comes to SNR liquidity and imbalances being rebalanced. We have an imbalance essentially taking place. Price forms overall its range, retests, establishes a weak low, continues higher, actually breaks structure this time. So why didn't price just come down and take off? Why doesn't it? Like a retest and continuation? Because it has unfinished business. There is a rebalancing in price that needs to take place before it actually goes up. Now, as you can see, we have our trading range. Price formed its imbalance or inefficiency, price inefficiency or imbalanced price action, whatever you want to call it, continued higher and altogether left what is seemingly to be unfinished business. Price comes down, establishes consequent encouragement. Why? Because did this low take out this low? It may have taken out a choke, may have performed a choke, but did it take out an overall low? No. So what does that make this? A weak low. What does price do? Retest, continue, and takes out that low. And then fulfills this overall imbalance and continues higher. Notice how this strong low is protected. Notice how this strong low is protected. Notice how the low before that is protected. Why? Because we're bullish. That's why. Moving on. This is essentially going to be your 3-candle formation. No matter if it looks like this, understand its liquidity. It is a structural high that has failed to take out previous, stay with me, this is where your structural high is going to be. Why? Liquidity grab, break structure. Did we break that high? Of course not. So what does that make this? It makes it liquidity, which means every high that's established is essentially going to be taken out, especially the structural high in general. So what does that mean? That means that with a skilled eye, you should be able to enter here, here, here. I am not over exaggerating either. Here, as well as here, all the way to your external range liquidity or structural high. Don't forget, it's liquidity. At this point, price is presenting a slanted high. Price seemingly forgot about this slanted high. If you look at this retrospect or the overall picture, price essentially has performed accumulation, manipulated out of it, retested, and continued lower. Now, continuing price pretty much does the same thing. However, it continues to form a resistance to this price level, to this key level. So at that point, you already have an idea of where price may be going long term. But for now, yes, price is bearish. So we're going to continue looking for shorts, until we obviously perform a strong low. At this point, the market nature or the market in general, the momentum has shifted. Price has officially performed a liquidity grab. We have a choke as well as a break of structure. Where are our targets? Well, if we look left, we have buy side liquidity in these equal highs, as well as maybe a slanted high that we can, target a bit more long term. We also can see as, time goes on that price inevitably continues to hold at this resistance level. Why? There's a simple reason why. It's to build up liquidity, build up buy side liquidity, which overall it did finally performed a BOS, even if it's a wick, continued lower, offered yet another opportunity for what? SNR liquidity. That would be your entry, another entry, I guess long entry, in order to target. Why? Because imagine the short orders that are waiting here just to be taken out. Last but not least, we have obvious order blocks. I have no idea why smart money loves these pin bars or these quote unquote order block. I have no idea why, but they enjoy them. I don't think they work, but apparently they worked for some people. Like I said, every pattern, every concept has its pros and cons. But as far as smart money, a lot of people don't necessarily know what they're doing, so it's kind of like a lot more cons than pros. But however you feel, price essentially establishes a weak high. Why is this high weak? Because did it take out this high to the left? No. So it's weak. Simple. What does that mean? This means this high is liquidity. So if you were smart money trying to trade a fair value or maybe a one or worse, a one, understand you've been capped out of the market a plethora of times, especially if you don't necessarily know what you're doing. Why? There's a choke. There's BOS. Price is creating higher highs, whether they be weak or not. It's creating higher highs. It's pushing the market up. Price is rallying. Now, you can either learn how to do the fib trick or you can learn how to read price action. What do I mean by that? Well, price essentially, assuming you didn't take this block of whores, price essentially performed a choke, BOS, retested, unmitigated wick, continued higher. At this point, if you wait for your counter formation to close, we took out internal range liquidity to the left, which happened to be what? A three candle formation. 1, 2, 3. That's liquidity. Now, if you waited for, or if you were smart enough to wait for this last candle to close, you would have seen that price performed a liquidity grab, break of structure retest, indecision candle retested, continue lower. Pretty simple. And how do you know? How can you confirm, bro? The trend is your friend. When people say the trend is your friend, understand they are not lying. This has been Liquidity Inducements from Jody FX Trading Course. Y'all have a good day.